We just had the news that $20 trillion of new capital will be getting access to crypto. Will this be enough to pull crypto out of its bear market? Now, it's a hot debate right now whether crypto already bottomed back in June at a $17,000 Bitcoin, or whether it's just a bear market rally and a bigger crash is still yet to come. Welcome back all, and as Cathie Wood and the team at Ark Invest have just completed their monthly crypto analysis, we'll be taking a look at the biggest insights and takeaways for the month, including a major indicator that just got broken, how the $20 trillion BlackRock news can impact the price of crypto, and then we'll finish up showing exactly how all institutional capital can and probably will send crypto to the moon. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, a major indicator just got broken. So does this mean crypto's bear market is over, or a bigger crash is still yet to come?
The 200-week moving average of Bitcoin. Remember, Bitcoin peaked close to 70,000 last November, and it got down to somewhere in the $17,000 range very recently. And that broke the 200-week moving average. So that was a very negative sign. So the technicians out there were saying, well, if it cannot reclaim and get back up there pretty quickly, then we're probably going to 10 to 13,000. So it has reclaimed the 200-week moving average, which is a little bit above, I think, 21 or 22,000. So that's reassuring. We've seen some stabilization there. And the decline this time around, believe it or not, it was pretty intense, but was not as steep as it has been in the past. Normally it's more than 80% decline. So this was close, but we didn't quite get there.
So the 200-week moving average is a 4-year chart which correlates to Bitcoin's 4-year halving cycle, and historically when breached has turned out to be an excellent time to accumulate. Now, Cathie Wood remains positive that because Bitcoin reclaimed back above, that we probably won't be going down to the $13,000 level. However, she hasn't taken an official stance saying that the bottom is in. Next up, we just had one of the biggest pieces of news this year for crypto, which was BlackRock, the world's largest asset manager, choosing to partner with Coinbase. And what impact could this have on crypto prices?
The other reassuring piece of news recently that came out was an agreement yesterday announced between BlackRock and Coinbase to partner so that BlackRock could, through its Aladdin technology solutions ecosystem, on which $40 trillion worth of assets sit, they wanted a seamless on-ramp into crypto that Coinbase is going to provide. So this is another legitimization of Bitcoin and crypto generally as a new asset class. If we're right, that 40 trillion just from BlackRock's platform hosting other institutions, that would translate, if you just took our study, which basically said if you want to access crypto, but you want to minimize, you're more focused on minimizing volatility than increasing your Sharpe ratio, then you would put 2.5% into crypto. And if you're more interested in the Sharpe ratio, so returns per measure of risk, than you are about volatility, you'd put 6.5%. So assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there, if we just assumed it was all done in Bitcoin.
So the institutional clients of BlackRock have been screaming to get access to crypto, and when you add all their assets together, it's an incredible potential $20 trillion of new capital for crypto. And as you saw from Cathie's calculation, if the clients of BlackRock just allocate 2.5%, this works out to be $1 trillion of new capital. And remember, the entire crypto market right now is just over 1 trillion. And if they allocate 6.5%, this works out closer to $3 trillion. And this is just from BlackRock alone. Now, to finish up on a high note and to get you salivating like a puppy in a pie shop, let's take a look at how all institutional capital can and most likely will be impacting crypto prices, as it's huge. This is a chart put together by Yassine El-Mandra and the team at Ark Invest. And basically what it shows is the hypothetical impact of all institutional investment on the price of Bitcoin. And the different categories, we have high net worth individuals, we have the mass affluent, pension funds, insurance companies, and sovereign wealth funds. And this is what it can potentially do to Bitcoin's price. And remember, Bitcoin's price right now is about $23,000. And the all-time high was about $69,000. And they've got three categories: a 1% allocation, 2.5%, and then a full 6.5%. And amazingly, if you just take the most conservative, just 1% allocation, this would get Bitcoin back above its all-time highs and very close to 100,000, meaning the market would do a 4x. And this alone would put everybody back in profit. So for me, this is a very realistic and optimistic target. Then at a 2.5% allocation, this means Bitcoin would 9x from today's price, meaning the crypto market would probably be doing multiples of that. And then the full 6.5% would be over a 20x. And this is just institutions. This isn't including anything else. So the 200-week moving average currently sits at about $23,000, and this is a pivotal price point, and for me it's really 50-50 as to which way it breaks. This week we had the epic news that BlackRock will be giving its institutional clients access to crypto to the tune of $20 trillion, starting with Bitcoin. And if all institutions were to allocate just 1% to Bitcoin, then this would be enough to 4 times the market, take it back to all-time highs, and put everybody back in profit. And that's not including anything else going on. And for this reason, this is why I remain so bullish on the crypto market. So there you are, guys. Hope you enjoyed. Now, any questions or comments, just post them below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.